Hi, I'm Maggie Lake, your host for this special UN Global Compact series, Financing a Sustainable Future, CFO Insights. You'll hear from the chief financial officers who are part of a special task force convened by the UN. They are using their platforms and influence to reshape the future of corporate finance and invest to help achieve the Sustainable Development Goals and build a resilient future. This is CFO Insights. So Pedro, as the CFO, how have you and your financial team been able to use your platform to advance the sustainability agenda or the SDGs?
We have been doing this in multiple ways. So part of it is the internal agenda of improving the way that we select our portfolio of investments. We can talk a little bit more about that on kind of the internal side, the investment thesis, and making sure that our investment portfolio is capturing and prioritizing all the opportunities we have to further the SDGs. But on the other hand, is also on the financial markets. For example, we just issued out of our Mexican subsidiary our first sustainability-linked bond. It was a $1.2 billion transaction that closed a couple of weeks ago, which also shows the commitment to, in this case, a reduction of our carbon footprint in Mexico. So we've been doing it in multiple ways, and we keep looking for opportunities and additional initiatives to further the SDGs.
So you really plug that sustainability ESG into the very core of the business and the business decision making, it sounds like.
Yes, and if you look at even at our strategy, right, we have defined 7 macro objectives for 2030. We had already that for 2020, and then we closed the 2020 cycle, and then now we are in the 2030 cycle. And those are also organized around the SDGs. So we have safety, of course, taking care of people is our number one value. But then we have environmental goals, we have social responsibility goals. And to give an example, right, on the business side, this has been leading our strategy in terms of the business priority. So we are now looking at circular economy, so recycled polymers and plastics. Braskem is a large plastic producer, chemical producer. So we're looking at renewable chemicals, renewable plastics as well coming out of biomass. That helps in the carbon footprint. We're looking at energy efficiency, renewable energy. The shift towards the SDGs has impacted the entire company strategy, not only, I would say, the investment prioritization portfolio, which is a part of what I mentioned before, but also the key levers of our growth going forward.
And in addition to that, what do you think the biggest barriers are to integrating sustainability into your sector?
Yeah, so I just mentioned the accounting methodology and kind of having a standard framework. That is, I think, one of the key hurdles, given that for the sector we don't have yet a common standard globally. And then the other one that I think is also really important is related to scope 3 for chemicals and plastics. I think the entire industry measures scope 1 and 2 well enough, but when you come to scope 3, it is on the one hand harder to measure, and also, I mean, our scope 3 is somebody else's, our supplier's scope 1 or 2, right? So how do you account for that? Should it be included or not? How to mitigate the impact? So all of that, I think, is still a hurdle in terms of again defining and having a common perspective on what are the important aspects for the sector.
What do investors need to understand about financing the transition, especially in emerging markets and some of the parts of the world that you operate in?
Maggie, that's a really interesting and good question. I think there are 2 key points that I think investors need to understand. I think everybody I see more of this dialogue coming up. So, and I think that's very productive. One of them is the transition itself. So I'll give you an example that is not from an emerging market. It's from Canada. I heard a few weeks ago the story that, there was this power electricity producer in Canada that has a huge coal base. So they are moving to renewable sources, but they still have a very large coal thermal base. And the issue there is, okay, Canada still needs the coal base. If investors push the company too hard, they will sell their assets to somebody that maybe is not so careful and not so mindful of the impacts and is not investing so much in mitigating the impacts of the coal power base. And then that will lead the world to be in a worse situation, right? The company becomes net zero, let's say, or something like that, right? It reduces its carbon footprint, but Canada and the world become worse off because the new owner of the assets could be a very, I would say, not so good operator. So this is one thing, right? How hard should investors push for the transition or not? What are the alternatives, and what are kind of the unintended consequences that could happen from this push? The other one that I think is also very relevant is about trade-offs. So, and then I'll use the example of our industry in terms of plastics, right? Everybody knows that plastics the use of plastics has a problem in terms of recycling, and it's something that the world is moving towards improving. We have several initiatives on that. We call it circular economy as a whole, right? And it is one of the new business areas that we have set up 3 years ago. But what happens if the world decides to give up on plastics? Everything else will become more expensive, right? Plastics are a very versatile and economic product that allows for all different people in the world with different income levels to consume and to have access to a better life. So if you decide to give up on plastics, you're actually making people worse off on the social aspects, right? On their you're making people worse off in terms of their well-being. So it is something that also investors need to be mindful of in terms of the trade-offs that they are pushing companies to make, and the impacts that has on the broader society.
Does the task force have a role to play, and international organizations in helping educate and explain around the transition?
I think it does give the task force a new role, or a potential new role, in terms of what we as a group of CFOs in large companies globally can do to educate the world about the trade-offs. It does make our communication to investors more relevant. So it's important to show these trade-offs and show the differences, the decisions that investors are pushing companies to make. But as you said, Maggie, I think it's really an issue of how transparent this dialogue can be. I mean, it is important to pursue all the targets that lead to the SDGs. So it's not that companies will give up on that, and Braskem for sure is not going to give up on that. But on the other hand, I think that, again, we need to be careful about how hard to push so that you are not making the world worse off rather than better off.
Thank you for watching CFO Insights. For more information on the CFO Task Force for the SDGs, you can head over to www.cfotaskforce.org and share your insights on social media using the hashtag CFO Task Force. Don't forget to tag the UN Global Compact @Global Compact. We'll see you again soon.